Okay, we are back. I'm very happy to have on the Goldstein on Gelt Show Milton Kotler, who's the president of the Kotler Marketing Group, which is actually based in Washington, D.C., but which is one of the few companies which has a huge presence in China since 1999. And Milton Kotler is also the co-author with his brother of a book called Winning Global Markets, How Businesses Invest and Prosper in the World's High-Growth Cities. A real pleasure to have you.
It's a pleasure to be with you, Doug.
Now, I'm trying to figure out if you have some sort of prescient ability to figure out where to go, because you were in China a lot earlier than a lot of other people and certainly rode it through a big uphill and more recently through a big drop. How did you know to get in?
These things are very accidental or they're deliberate. I think you're more successful if you enter China on an accidental basis than a deliberate basis. I was chairman of the Washington Symphony Orchestra here in Washington, D.C., and the orchestra produced the first China concert after Tiananmen Square in 91. So I got a bunch of corporations that wanted to rebuild their relationships with China to sponsor this. And I produced, probably during my tenure, 8 China concerts. I met the ambassadors, the staff, and then the Minister of Culture came to Washington, and I hosted a luncheon for him, and he invited me to China in 97. So my first trip to China was 98. I went back to the first Shanghai Music Festival in 99, and then a couple of Chinese finance guys wanted to start a marketing firm, and of course they came to Kotler, which is the preeminent name in marketing, and they gave me a deal that I couldn't resist. So at the age of 64, I turned my U.S. business over to my son, who was chomping at the bit to run the company, and I decided to retire in China.
Wow. At least there are a lot of Chinese restaurants there. So the economy there certainly has changed a lot since you started. Tell me what it looks like now, because quite frankly, I remember just a few years ago, everyone said, you should put all your money in China. It makes 8%, growth of 8% every year. Of course, we've had a bit of a shakeup.
Well, then it was 10%.
Yeah. Is it real? Is the government just manipulating the numbers? Is that a place where normal people should be investing?
Well, if you're talking about equities, I would not advise investors to enter the Shanghai Exchange without great caution, because it's not a truly open. Now, no market is truly open. There's an awful lot of junk that goes on in any market, including the U.S. financial market. But the market in China, the equity market and the bond market, are very managed by the government. And you're always subject to government changes in policy. So it's hard to know where the market's going in China. We just had a 40% collapse in the market after an annual increase of 100%. So on a year-to-year basis, the market is still up for older investors. And not that many people invest in the market in China.
But people talk about the building going on there. They're investing huge amounts of money in infrastructure that no one's using, and that it sounds like it's such a government-controlled move. And as a good old-fashioned capitalist, I find it hard to believe that you'll really see real growth, underlying growth, when you have the government deciding which city to build and try to move 1 million or 2 or 10 million people from one place to the next.
Well, you have to look at this very carefully. Property values in the first-tier cities are going up. You're talking about Beijing, Shanghai, Chengdu, Shenzhen, and Chongqing, and other first-tier cities. The property prices in Beijing are astronomical, more than New York. Now, the real problem in the property deflation is in second and mostly third-tier cities, where the government has tried to decentralize part of its urbanization policy. It's trying to create more third-tier cities to attract rural people closer to those third-tier capital cities. There's an awful lot of overbuilding there in
Hmm.
anticipation of urbanization. Now, you got to understand that in China, there's no private ownership of land. Developers get purchase land rights for
Hmm.
70 years, 80 years, 90 years, depending on the category. So, what happens is that when the government makes a policy of moving more population to the cities, now roughly 60% urban, 40 rural, the benchmark is 80-20 by 2025. So that's a lot of absorption. Now, in order to build in China, you have to have land. You buy the land from the local government. Then you have to provide replacement housing before you can develop. So the buildings have to go up. The buildings have to stay empty until the farmers move in.
Hmm. So you're saying this is a whole process to develop it. We're talking with Milton Kotler, who is an expert in China, having moved his company or moved a piece of the company to China over 15 years ago, and has now over 50 professionals working on his team there, as well as his office in Washington, D.C. He's been talking to us a little bit about the real estate side of China. I'd like to dig in a little bit more and focus on the fact that so many people are nervous about China. They're nervous about emerging markets in many areas, or although I guess China's quite an emerged market already. And yet they feel that given that concern, they'll still want to look for a way to invest. It Not understanding the Chinese mentality, I feel for myself that I don't want to put my money there in any which way, through a mutual fund, an ETF, or whatever. But I feel like there might be an opportunity. If someone was willing to take the kind of risk that is associated with this sort of investing, do you think it might pay off, not necessarily over the next 6 to 12 months, but this next 6 to 12 years? Are they going to get their act together?
Well, look, when you talk about investing in China, most of the foreign direct investment into China is done by the multinational companies and large mid-sized companies.
So just to confirm, what that means is if you invest, I just want to clarify, it means if you're buying shares of Apple or General Electric, they are so involved already with China that you're actually connected deeply with the Chinese economy? Is that what you're
No,
saying?
you're investing in the growth of the domestic market in China. I mean, that's what all the corporations are doing in investments, whether it's Apple or GE. The China domestic market is growing at a healthy pace. Service sector in China now exceeds the manufacturing sector in value. So there's more
Sounds very American.
consumption. There's consumption is growing. Government is supporting a lot of technology advancement. Companies are buying new machinery and making machinery. So you're investing in the pharmaceutical sector. You're investing in the machine sector. So China business to business market is growing, and China consumer market is growing, but it's not growing at the earlier 3 decades of 10%. It's growing now officially at 7. Realistically, it's less than that. How much less? I would advise your readers to look at a new book called The Broken Abacus by Daniel Rosen, who's probably the best statistical expert on Chinese statistics. And he basically ratifies Chinese government numbers.
Okay, so we'll put a link to that, by the way, at the show notes of today's show at goldsteinongelt.com so people can find that book as well as your books. Milton, we're nearly out of time, but I just want to know, I'd like to just direct people a little bit to the book that you recently wrote called Winning Global Markets. Give me a 1 or 2 sentence summary of what's going on there, and then I'll ask you how people can find you, and then we'll wrap up.
Okay. Doug, the essence of winning global markets is a very well-researched and documented survey of where investment is going. Investment today, global investment of developing economies, is going to the major top-tier cities. So today, 600 cities globally control 65% of global GDP. That will increase. You'll probably, over the next decade, have probably coverage of 80% of global GDP by 600 cities. These 600 cities are changing. Many of the old Western cities are falling off the list of top attractors, and many new Asian cities in China and elsewhere in Asia are in the top 600 for investment. So growth, global growth, is not by country, it's by city. That is the key thing for any business. What cities am I going to invest my resources for market growth?
All right. And we will tell people how they can learn more about that and learn more about what you're doing. What's the best way, Milton, that people can follow you, follow your company, and follow your writing?
Well, if you read Chinese, you can see my Chinese website. Well, KotlerMarketing.com is our U.S. global site, but our China site is www.kotler.com.cn. I would suggest that your readers read my latest book, Winning Global Markets, that came out in 2014 by Wiley, the publisher Wiley, and then also take a look at my 2013 book called Market Your Way to Growth, also published by Wiley.
Okay, and we will put links to those at the show notes of today's show at goldsteinongelt.com. Milton Kotler, thank you very, very much for taking the time today.
A pleasure, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.